In this video today, we're going to go over top 10 stocks that I think have the most potential to move next week. On top of that, I'm going to give one at the end that I'm seeing all over Twitter and YouTube that people are saying to be involved in and to watch. And I'm going to speak at the end on why you need to avoid this. And this is a classic example of why you have to do your own research. But that's it, and this is extremely timely information, so as always, please consider subscribing to the channel and clicking on the all notifications, because the information that we go over becomes outdated within a week or two. So let's just get right into it. So out of the top 10, the very first one, and these are in no particular order, is going to be Planter. And people will remember this from the newsletter. We bought this at 16. When we had a nice little breakout here, and then when we traded, we just traded around it a little bit, and we did okay with it. I think we wound up selling some actually at like right around here, and then blowing out the rest before this came down. But what we're seeing now, and I want to drill down into these 10 a little bit so people can understand what they need to look for their own ideas. So I think that's really important. I try to educate as what it takes to be a consistent and successful trader, and that involves being profitable. And in order to be profitable, you need to have a high degree of probability. So identifying these patterns is important. So we're going to do it. We're going to drag this out a little bit, but let's just walk through this on the daily first, and let's just look at price. So you see how you undercut here. So this is a simple undercut of a support line, and it bounced through. The next day, we rallied right through this wedge line, okay? And then this downward trend line, or as this is referred to in trader lingo, a DTL. So then what happened? Then the next day we broke a support. So there's three things that have happened this week on this stock where we are clearing key levels, right? See how the hammer bar ran right to the lower end of this? So we have three key levels cleared in a week. That's a pretty substantial move. If you go through the majority of the charts, you're not going to see this. And this is a secondary name. This is not a first-tier name. So it's kind of showing you how strong the stock is. Now, with that said, notice how this bar, even though this was an up bar, notice how this gapped below support and then traded up over it. And look where we are. We encapsulated this whole bar. Now, overlay this and put the indicators in. Okay? The 5 to 8 crossover, which we've gone over numerous times, and there's a video in the indicators playlist section that you can review if you need to. Now I'm above this 21 day, and on top of that, the 50s right here. But flipping this 21 day does a couple things, doesn't it? And we've discussed these. And what we're going to do is I'm just going to pull up these Bollinger Bands really quickly so you can understand this. So as I stated before, when you come down to here and you touch this and you flip over this, see this Bollinger Band line? When you flip over it, and these Bollinger Bands are set at a second standard deviation where all Bollinger Bands should really be set. And you see when you're here, you're flipping over the median line. That median line is a 20 SMA is the best way to explain it. And I just use a 21. So if I throw this in, right, I mean, it's the same guide. I mean, it's off by a hair. So, that's it with a nutshell. So you're flipping over this, which leads me to believe that we're heading back to this 32 range, because you see now how we're in the flag again. And when that happens, we should go higher. Now, there's one little, I won't call it a hiccup, and you can probably even draw it back to here. But you see this? So you got to just watch these levels a little bit, make sure that they stay above that upper trend. But it does look like that's going to happen anyway. But let's go into the weekly now and take a look at this. Okay, this is the weekly. This is all you really need to know. Okay, we have not had one green bar all for 1, 2, 3, 4, 5. And everybody on Twitter, and we keep talking about it going, is today the day? Is today the day? No, it's not. And you can see this level. And you can see why that's a trouble level. You can see why this is a trouble level. This will mark where we are in the other chart too, the 32 range. So this is where you're trading to. But let's get rid of these horizontal lines for a moment and just look at this. So I have a very simple pattern here. And look where we opened on the week, because this type of stuff is extremely important. You opened on the week right above the trend line. You never went below it. You closed at the high of the week. this is signifying that we're probably going higher. So this is the first one. These are not in order, but what you would look for and say, okay, Tone, this sounds great. When do I buy it? You buy it when it goes up higher high over here, and you want to drill down and you want to see the volume. And you can look at a 15-minute chart and use a 30-day line to see volume. So for example, here was your volume spike, right? Boom. Then you flip the support that day. What happens? It was a perfect entry. So, and then we filled the gap, and it traded fairly well on the day, didn't it? So definitely keep that in mind, but that's a little quick tip for you. So this one's in the newsletter, and we've addressed this one, and we've done pretty well with it already in the newsletter. We can look at this on a weekly, but, look, this is just a clear breakout. I mean, there's really no other way to say it. I mean, it's just a crystal clear breakout. We bought it in the newsletter right here. So I broke this weekly wedge, and then I broke above this, and that's when that was our trigger for the newsletter right here. Okay, and then based upon, look at this volume that came in. I did it based upon the volume that came in as well, and there are a couple other indicators that I utilize, but I don't want to inundate everybody. Let's just get the basics down. So you flip this, and then boom, it was off to the races. I think this has massive potential. Now, obviously, it is Bitcoin related and what they do. This is CAN, and we're in down here, so we'll move the stop up. I said to trim it up here when we were up like 45%, and we'll move our stop up. But I don't think this move is done, and I think this can continue to move on the week. I actually was adding on Friday. If people have been following me for a while, they can tell where. You see this upper trend line? This upper trend line is your channel. Okay, so if I draw this and then I clone it, you'll see how it tucks in right here as well. For time's sake, we're just going to move along. But when you pop out of this and then you don't go back into it, this is a clear sign that you could go parabolic. Okay, and so where would you buy this? People know that have been following me for a while. I would recommend buying it as close to this line as you possibly could, and then if it flips below it or closes below it, or a lower low, then you just blow it out and you're wrong. But this is setting up here, and the volatility on Friday really didn't bother me. We took out a new high on Friday, and then we just pulled back. I mean, look, in 4 days we've gone up substantially, but staying above this, and depending upon how Bitcoin opens on Monday, Tuesday, this is setting for some gaps up, and this could have some real momentum to it, but it's not for the weak of heart. It's going to be extremely volatile. This is really interesting what's going on here. So let's just look at this. Okay, I've had this drawn for a while, and it failed here, it failed, and I've just been watching it because it's such an interesting story. Camping World, you're a small cap company. They've got big backers, and they have big names in this that are promoting it, and people are trying to get back outdoors. With what's going on with the pandemic, and it just has never gotten any steam. Well, that looks like it's about to change. So what we're seeing happen here is this is a huge cup. Okay, a huge cup. I mean, this is huge. So you're from 7 to 40. Let's just call it 30 points, just to make the math simple, so people can follow along, right? If I break this, based upon the length and depth of this, right, this becomes an inverse head and shoulders, and you can probably see that. Like, picture this flipped, right? Picture this flipped the other way. So you're looking at it, right side up, upside down, however you want to view it. But picture this being the peak, not the valley. So we're at an inverse head and shoulders. When I get over this line, that's one trigger. The next that will solidify the inverse head and shoulders is up here. I'm not going to wait for 8 points. Getting above this, which is where we look like we already are, just give me that little bit of a higher high, right? A 43 3/4, and you almost have to do this trade. I mean, this thing could just really run. And what's interesting is, while this is pointing down and we're not getting the same movement as we got, during the pandemic, this is one of those stocks that actually did fairly well during the pandemic, but still hasn't gotten to this high. So when the earnings catch up to this, which they will, it'll go higher. Now we just trade technically here, but and you see how this is coming in, but you are seeing huge spikes of volume here. So this is definitely one to put on your radar, and I would really consider using that as a pivot. See how we failed? Boom, bonk, bonk. When this breaks, it's going to go. And then you can see these other levels, right? This is the daily now. And you can see how, hold on 1 second, I'm trying to make all these the same so people can see them. So, and as you see here, you got this trend line here. When we pop over this 47 and into this, you're back in this channel. You go to the high end of this. Like, there's a lot of room here. I can't stress it enough. It just needs to trigger. So this is one that I'm just going to show like one little tool that you might want to consider. And we're going to throw everything back in here for a moment. But I just want you to go through this one and explain why this is on the list. This is a classic looking bear flag. And if you can't see the bear flag, I'll explain it to you. This is the flagpole. This right here. Okay? And then you break down. Right? But we don't go to the low of that flagpole anymore, do we? So what's interesting about flags and what you need to understand about them, and I don't want to inundate with too much, but this is kind of important. When you're building a flag, a high tight flag, meaning when you're building up at the high of that, is much better than when you're on the low end of the flag, right? Inversely with bears. So this bear flag, if you were down here, the proximity, and one of the gentlemen asked me on Twitter today, and if you don't follow me on Twitter, I'd recommend it because I throw out a lot of actionable ideas during the day. And there's a link in the bio or in the description in the banner. But here, see how you're at the top end of this, right? So here we are. Here's your flagpole, but now you're at the top end. Now, what does that mean? That means that the chances and probability, and that's all we're discussing is probability of price action, is that this is going to reverse and at least get up to here and challenge this, which gives me 10, 12 points so I can move my stop up and reduce my risk the whole way. What else I like about this is every single day, 1, 2, 3, 4, 5, I have this one outliner, right? But every single day besides that was an inside day. And look how they're starting to turn. They're starting to get smaller and green. So this is setting up for a move. Now, a break above this bar would be substantial. If you get above both of these, that 54 level, it's substantial. And what's great about this is I'm only $1 off right now. So your risk versus return is like $1 here to get up to here. So I'm already at 6 to 1 on this trade. Now, I do want to throw some other things in here while we're here because I do want you to understand this. Okay, so let's get rid of the bands for a moment. Okay, so you see how not only are you in the lower end of this flag, but how this 5-8 is about to cross and it hasn't yet. That's one of our buy signals. It's not the buy signal. We use several layers, but what you want to do is you want to see this. It's one more data piece, right? It's one more thing that confirms your opinion. So when these cross over and then push to the upside, this is going to trigger a lot of people. So you want to be ahead of it a little bit and just watch. Also, please note how this 50-day, and we talk about these lines, how they become support and resistance. This was resistance. See how it was support here, how it was resistance here, support, support, boom, boom. So now we're switching. And, I don't want to throw too many bells and whistles in, but let's get rid of this for a minute. And I just want to show this because I thought this was pretty interesting. Let me find out where that is. Where's January 1st is here. Okay. All right. So this is very interesting. So this is anchored VWAP, and I'm using Trend Spiders, and I'll throw a link in the description if you want to try it. The system, I think they give you a 7-day free trial period with it. But let's just get back to this. This anchored VWAP is taking volume weighted price at a specific time. So you can draw these anywhere, so you have to figure out which ones work for you. But this is on January 1st. the beginning of the year, which is a fairly good place to use one because it tells you, hey, for the year, or am I up or down? Have I been buying or not buying? And it just so happens that it's falling right here as a resistance level, and this will flip again over here. Now, if that flips, we're going to go to the 61, 62. So it's one more data piece, and I'll just remove this, and it's just one more data piece that shows us that this has potential to be a big mover. And that's really what you're looking for. It's like putting a puzzle together. So this is one that I played on Friday for those that follow me on Twitter, and I called it when I did it. I bought it right off the open. The gap down, and then I just thought it would trade higher today. I needed to get above this, and it just obviously wasn't going to happen that day. But it had gave me enough that you can move the stop up and not really worry about the trade anymore. You always have gap risk, but so if you look at what's going on, you have your 5 and your 8, and they cross, right? And then what did that signify? Boom, a move up. And that video is an indicator, so maybe I'll remember to link it in the playlist at the end. But so you come up to here. Now I have a swing, don't I? 63.50, right? So that's really what I want to see. The 60, what is that? 63.50. So I need that to flip. When that flips, this is going to go. This is going to run. You can see the momentum behind it, and the higher high on this on the weekly it's definitely got the Momo behind it. And on top of that, you can see this, right? So this was here, and then you closed right below it, get above this, get above that, and then this cup starts to form, will backfill and push higher. So getting above this 63 level, it looks like, actually I apologize, it looks like 65 level. Let's just get exact where I am here so I can give you an exact price. 65.5. So you'd be looking at flipping at 65 3/4, we'll call it. So that gets me to this $90 again. So this is definitely one to put on the radar. This one was in our newsletter as well, and I don't think we're anywhere near done. And we put this in the newsletter at 61.5. And what I liked about it at the day was how we flipped the line, right? Now you can see here. See how we flipped right up here? And then I wanted confirmation because we flipped right on, I'm pointing and that's not really going to help you. So you see right here, that's where we flipped. We flipped right at the open of this bar after filling in this gap. So it's not the most, it's not the most optimal flip. So we held off on it, right? And then you can see it here, and then we pushed. And if you drill down into this, you can see the battle going on in this at this price point, right? Here's the hourly, and I got a bunch of lines on here that are not significant anymore. But so you could see the battle going on here. This is that 57.50 line, right? Bonk, bonk, right? Hits it, falls down, rallies, and it just happens that it breaks on the hourly when this breaks, and then it goes. So this was pretty substantial. And I definitely one that you need to keep out there and keep in front of you. I don't think this moves over. We broke out of this falling wedge, and now we can get rid of these lines because they're really noise. We're above all of them. We're out of this falling wedge. We're above major resistance. This was major resistance. And the other thing that's transpired now, you see these 3 points here? When you get above this, when you get above these 3 points and this, you're setting up. Okay, and notice how this line is here and this one is here and how the trajectory is getting wider and wider. There's a trend here, and I almost don't want to show it because it's just so excessive. But this thing, and people were asking why in the newsletter I put it can go to $100. This can go to $100. This can run. I'm not talking about the merits of the company. I'm not talking about the price earnings multiple. I'm talking about what can happen. So put this out there as something that you may want to consider. You certainly want to watch it. And if you don't get the newsletter, it's free, and there's a link in the descriptions. So this is something that I just think it's really setting up for a long-term move. You have these downward trends that it's just clearing line after line, and just look how it's stepping up. Boom, and look at the volume that came in. I mean, this was beginning of November, and I traded 125 million shares on a week where we usually trade 40, 3-to-1 at the bottom, and it just exploded up, formed a little high tight flag like we just talked about, broke out of it, formed another 3-bar pattern, broke out of it. What we really need to see now is this 68.33. If you flip 68.33 based upon the fact that this will be the break of the base that's never happened for the stock. This has not happened, right? It's just opened and gone down since it went public. If you break 68.33 and you flip up, you have a 4-year base here, and that'll be pretty substantial on driving the stock higher. And with the way that the IWM is acting towards smaller cap stocks, that could certainly happen. Now, this is a favorite of mine, and then we have 2 more left, and I do want to go over this one that I do think that people just need to avoid, and shows why you need to learn how to do your own research. It's great to listen to people like myself that if you think we know what we're talking about, but it's really important, and you clone these, and by cloning them, they give you the same trajectory, which is what you want. You want the same trajectory. You don't have a true channel. But you need to learn how to do this for yourself so that when you see something on Twitter where someone's saying, oh, this is a buy and this is why, just because they put it out there doesn't mean they have a freaking clue what they're talking about. There are guys on Twitter that I follow that have 100, 200,000 followers. I follow them to fade their ideas, to be frank with you. So it's the purpose of me doing all this is to tell you that you need to educate yourself so that you can spot things. And that's why I'll be pointing this out at the end of this video. So net, see this pattern? And what stocks have not bounced at all yet off this bounce, right? Since we've bounced, we've hardly seen these really rally, this whole cloud space. Now you have a double bottom here and a reversal out of the wedge. If you clear, so the high of this is 77.49, the high of this is 76.78. So it's a really simple idea. Get above 77.5, which, wow, just, let's just look at that for a moment, right? Look how it hits there all the time. Boom, boom, bonk, 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 right? You flip this 77.5, you're flipping a major resistance. You flip that, you're going back to 90, 95 fairly quickly. You're at minimum going back to here. 90, and this will move fast. I mean, their earnings are not going away, and people are going to want to be in that. And if you look at this, you can see how we fell out of the channel. I mean, what happens when you fall out of the channel, right? And then you have to get back into it as soon as possible, because if you don't get back into it as soon as possible, this is what happens. These start pointing down. Now we have a little 5A crossover, which is nice. Get me above 77.5, and I will be all over this. So I'm not sure where this one's going to open, but I do want to go through this one. He gets a lot of press, Penn, Portnoy, and whether you love him or hate him, I actually enjoy watching him. I find it hysterical, but you got to realize it's entertainment. You have a huge flag here that you're going to break out of because it's been added to the S&P. So you're going to have to watch where this one opens on Monday, but people are going to have to buy the stock. And you can see now that your support level is 110, right? So you're right there on the weekly, and frankly, I'm above everything on price, so I really don't need these. I mean, it's not really adding value. So you see how you're breaking out above this? This can go. Now, overlay that with this, right? So you have to keep this in mind. You don't want to be buying if we gap high and you're at 146. You'd wait for the backfill to 130 and then get involved. But what you would do then is just watch it consolidate. But this is going to move. They're going to add it. Love them or hate them, they're adding this to the S&P 500, and it's going to go higher. And then finally, out of the top 10 ideas, and then I'm just going to review that one that I really think you need to avoid. And I'm probably going to make that a pattern during this week so I can just explain why, someone says something and why you might just want to think differently about it. It's not to call anybody out, but it's just to make you think, who is this person and why in the world am I listening to them? And what you do again is you just clone these, right? Real simple. And then you just pop them in there and you can see where they fit. And if it fits perfectly, that fits perfectly, right? Okay. We're going to leave the arrows because I don't feel like getting rid of them. I'm going to just move along. You need to reverse here, but if you close above this 162 level, you could run. Now, if you make a higher high on the bar, 169, 170, this thing's going to $200 and it's going fast. This is something, clear break is 48. Yeah, we were in this before down here, traded out of it, and then I think we got stopped out a little too early on it. But yeah, we were in this before. But we were showing this recently as another one too, where I bought it. And again, this is why I said you might want to follow me on Twitter. Looking for another way to live call stuff for people. But when we broke this, when we crossed above this line, and I crossed above this line, I felt comfortable that we were going to push. And then I drilled down into the 15 minutes, and I called this that I bought it here. And then it went right exactly where I thought it was going to go, which it went to this upper trend, which just happened to tie into here. Now I've got to break through this. But if I break through this wedge, I'm going to pop back into this channel. If I have to break this wedge. And this thing is just, this is going to be a rocket ship. This is just going to keep on going. So, and you have another little pattern going on right here, right? You might be able to see this or not. And you broke out of it here the one time. You tried to escape, and it just didn't make it. And now you're out of it. So there's a lot going on here. But you get above this line. So if you want me to give you a price point, because I always get those messages just saying, please just give me a number. 170 is really where you're at. And go from there. And now let's get into this. So this is one I'm just going to tell you that you need to avoid. And on first glance, you might not understand why. And I understand why people like it. They crushed on earnings. It has a huge, enormous short position. But you really need to be careful here. And I'm just going to start with the weekly. So I have 3 down bars, okay? And all 3 down bars are met with what? Selling. And now I have this inverted hammer. I'm closing on the low of the week when the rest of the stocks that were stronger did not do this. The upper trend line for the weekly is down to here, which means that I could go back to 62, 63 and still be in this range. And I failed my breakout. Planter didn't fail its breakout, right? When we go back and look at that, what stock's stronger? This is, comparison is part of the game. You want your money to be in the ones that have the most probability of working for you. Earnings are out, so you don't have earnings risk, but this was troublesome. I do like this long term, but it doesn't mean that it can't go back down to the lower end of this bar, 65, 66, before pushing again. And I don't want to go for that ride. If you do, that's great, but that's not how I trade. But you have this downtrend here, and before we even throw anything else into it, if you look at how you're rejecting here, you've rejected on this 116 level 1, 2, 3 times since all this has been going on. You haven't had a sustainable rally since this happened. So this lets you know that the bears are in charge of the stock, right? But here, okay, I cannot get above this wedge. I'm still having issues here. I'm forming smaller wedges to the downside. And what does this look like? It looks like an H, right? And we talk about these H patterns all the time. So until this confirms and shows me that it's not an H, you do not want to go near it. What would that mean? You have to break above this 116 level in order to get me interested. I don't care about these points because I don't know that I want to be in this trade. You might do a day trade on it, but I would be very careful. Now, I think you would come to here and break down through this and test lower. And if you look at a couple things, and I'll draw this real quick. Okay, here's your downward trend line. Okay, you can't get above it. You cannot stay above this trend. This is your daily lower trend line, and you can't stay above it. Hits it here, have one day of it, hits here, rolls. So you need to watch this. And the other thing I'll show you, and I'm going to get rid of some of these because I don't want to confuse everybody. And I talk about this, okay? I don't think this goes all the way. Nope. So, but look at this. And then we clone these so we can see them, right? So, because we want the same trajectory. Okay. You're in a rising wedge. Rising wedges are bearish. Very simply, they're very bearish. And because they lean to that failed rope, and that's exactly what the Qs did. And at the end of this video, I'm going to link to another video that will I'm going to go over the indexes in certain sectors I think are going to move. And just certain key levels you need to be aware of. But I wanted to break up the videos. So you're setting up for a failed rope pattern, or a frozen rope pattern is what they're called. You break out of these and you just have a long red bar. And you're right on there. You're setting up for it. Now let's overlay just a couple of these real quick. Okay, here's your 21 day. And this is what I want to stress to everybody. When I was saying in the newsletter why you need to get over your lower trend line as fast as possible, it's so that this doesn't happen. Like when you curve like this on your 21 day, you have issues. I mean, this thing's pointing straight down. I do not want to be involved with it. And you can see how that curves right there. But also look at this 50 day and really study this. You opened right on it and did nothing but sell down to the lower end of this during the day. That's all you did. So that's why I'm so big on saying that you may just want to, and you can see now we're below all the averages. And the next is really this at the 50. So if this breaks, I think you can go to 60s, 70s. So I would avoid this stock for now. It's just my opinion. I could be wrong. Won't be the first time in my life. But that's it in a nutshell. And if you're interested in seeing the indexes and the key levels, why I think we bottomed, that'll be at the end of this video. But if you could do me a favor and please like this video, because that's how I get involved with the algorithms, and YouTube shows the video, because I'm trying to educate as many people on what it takes to be a successful and consistent stock investor. Thank you very much. Have a great weekend.